As I mentioned in the emails that I sent out, this is the first program in 32 years that I know of where I have not had an investor sitting up in front. And yeah, I was thinking back, I've been involved with the group maybe 12, 13 years before I began running it and afterwards when I did. And the investors come and they're so generous with their time and their information, and they tell you, well, you need to have a product, you have to have a unique idea, you need to have an exit, you need to have a management team, and you need to know what you know, show some expertise, and then there's a 1% chance I'll invest money in you, in your company. And I thought, well, you know, they've been telling us that for 32 years. Let's flip it a bit. Let's speak to a couple of companies that have actually raised money and to see it from their perspective. We have on occasion had the investor and the entrepreneur together. That's a love fest. They love each other. You know, they never have anything negative to say about each other, and it really looks like it's all so easy. And as we all know, it's not that easy. So I am just so delighted to have Peter van der Meulen here. Are you still with 7AC? Okay. His company actually presented at one of the Piranha Ponds, but I met Peter a long time ago when he was with another startup, Blue Shift Technologies, and got to know each other pretty well. And I thought, well, he's raised money for 2 companies. He'd be a good speaker here. Jacqueline, I met when she presented at the Piranha Pond. Different field. You have mobile applications to help people with chronic diseases stay ahead of everything.
Yeah.
Is that it?
Yes.
Okay. And we met Jacqueline at the Piranha Pond. And in fact, she received funding from one of the angels that was there at the Piranha Pond. I tell you, it does work. Okay, if we have the good match of entrepreneur and investor, it can work. So I thought I would invite them to tell us a little bit about their stories, and I envision this as a very interactive question and answer type event. As you have questions, we'll see if they can answer them. So Jacqueline, why don't you give us a little bit more information about you, your company, and what you're doing?
Sure. Again, I'm Jacqueline Hung. I'm the co-founder and CEO of YubiKey Health. We're a consumer digital health company. YubiKey Health is a personal discovery platform that helps people with chronic conditions better understand which treatments or lifestyle changes can help them or have positive impacts on their on their health. What our platform does is provide people with mobile-enabled tools that help them drive those personal investigations to better understand that those certain factors in their lifestyle and treatment, and also share that information with their physicians. And we monetize through partnerships with pharmaceutical companies and healthcare insurers. We recently closed the first tranche of our seed round, and one of our investors, as Annette said, was actually one of the panelists on the Piranha Pond. And I presented at Piranha Pond about a year ago, so I think a lot of what I'll talk about is, you know, just the process and how long it can take. But things are going well. It's exciting to have closed some funding, and now we can move ahead with our project.
How old is your company?
So, well, if you look at the official founding records, we were founded at the end of 2009, but we then went ahead and tried to secure friends and family funding, and so we launched the very first version of our product in early 2011. So we've been working on it for about 2 years, and before receiving funding, we felt that we had to acquire a revenue-generating client to prove the business model, and we did. So last year, we closed our first revenue-generating deal with Merck, and that was the proof of market and proof of revenue generation, proof that we could sell to a big customer, even though we were a 2.5-person company. And I think that's what really convinced the investors to take a risk with us. And so we've been bootstrapped up until this point, and just about 6 weeks ago, it's our first round of external capital.
Now you say bootstrapped.
Yep.
You're working without getting paid?
Yeah, until now. So payroll starts this week.
Okay.
Yay.
You know, everybody uses the term bootstrap, but we don't always know what it means. And
Yeah, I mean, more than that is a bootstrap. It also means that you're surviving on capital that you're either you put in yourself and that you're generating. We were also living off the income from Merck, which helped us. I mean, it gave us a runway to have negotiating time with the investors, so that we actually didn't have our backs against the wall, and so we could negotiate and say, well, you know, if these terms aren't going to work for you, we're prepared to wait and work this out.
Peter,
So, good morning everybody. My name is Peter van der Meulen. Pick up a Dutch accent. I moved to the United States 25 years ago out of the Netherlands. Worked in the semiconductor space for 20 plus years, actually with Mr. Katz here at Brooks Automation in Chelmsford. I've done, as Annette mentioned, 2 startups. Just about 10 years ago, started a robotics company in the semiconductor space. Was very lucky. I was doing my MBA at Babson at the time and closed $6.5 million A rounds during my last class. It's a great way to graduate. I highly recommend it. That was lucky. Luck plays a big role in raising capital, honestly. But we'll talk about that, I'm sure, in a little minute. That company, unfortunately, in 2008, when the big downturn hit in semiconductor capital equipment, went down 90% in 1 year. So it was a $75 billion market globally, and it went down to 12. And so basically the VCs decided not to put any more money in, and we ran out of cash and sold the patent portfolio to Brooks Automation, of course, and my old nemesis there. And I started a new company in a totally different industry called 7 AC Technologies. Lucky air conditioning. 7 is the lucky number in Asia, if you recall. I felt I needed some luck, so started that in 2009. Ran for 3 years almost without a salary. Basically bootstrapping, had some grants. Fortunately, we had 2 grants, one from the Department of Energy for about $250,000 and one from the Department of Defense for about $100,000. But I had 7 people on staff full time, and none of us got paid for a long, long time. And then we closed about $7 million in funding last year, an A round with Angels, Clean Energy Venture Group, Launchpad, the Massachusetts Clean Energy Center was in that. And that was in March last year, so we ran our first payroll about a week later. We needed it. And then 3 months later, I got 3M to invest $4.5 million in the company, so we closed $7 million in funding last year. And we're just going out for our C round now. Actually, the A round should have been a seed round, the B round should have been an A round, and the C round should be a B round, but okay. And, these things get sometimes a little confused and egos get involved in naming these things. Nevertheless, we have about 15 people right now. We do high efficiency air conditioning systems for commercial buildings for the most part. So our targets are really supermarkets, places that use a lot of energy, right, refrigeration, and we can cut that by between 50 and 80% depending on the location, the application, and payback periods. Once we get to volume manufacturing, should be well under a year. And so we target hot and humid climates with supermarkets. Basically, the ideal place for us is like a Stop and Shop in Miami, let's say. That's a really good application for us.
are you selling product?
We are not selling product yet. We have a contract with 3M to put a system on a building in Connecticut this summer, and that should go out in about a month. Our first beta unit will go out to the Department of Energy for testing in the lab in about a week, and then after the 3M installation, well, actually, technically, I should say, I take that back. We did get a contract from the Department of Defense for a fully paid contract, actually, to put a system in Guam on a sports center, a military sports center on Anderson Air Force Base. And that is an energy upgrade that actually the Department of Energy is managing for the Department of Defense. And so we're subcontracted to the Department of Energy in that. So technically, yes, we have sold a system there because that's revenue and it's fully paid for everything, our flights. So I told my wife I'm going to spend next winter in Guam. Yes, sir.
I have a nice client for you.
Oh, you do?
My father was a deputy director of the Air Force Academy. And he worked on a project here on that Energy Air was together by 2020.
I can help.
Okay, and it works sometimes. Jack, how much of your time do you spend looking for money, and how much time do you spend running the company?
Well, fundraising is never ending, so you have to keep on doing it. But of course, part of the conditions of fundraising is also that you have to meet milestones and keep your investors happy. And meeting milestones makes it easier to continue raising money. So, we're an early stage company, and I think the big question for us is still continuing to prove out the revenue model. So we've got a huge client in Merck, which was impressive to angel investors, but now they want to see us get on Pfizer and Novartis, and so those are big companies. So realistically, for a period of time, I was probably spending 75% of my time raising money, and then 25% doing other stuff. Now I'm trying to shift the balance. Just after our close, in the last month or so, I've been trying to focus more on running the business so that we can meet those milestones. But I think that probably over the next 2 months, it's going to go back to about 50-50. So that's the reality.
Same question for you, Peter. How much time do you spend looking for money?
Well, at the moment, I just transitioned away from the CEO role. I'm the Chief Technical Officer at the company. Just brought one of my board members in as a CEO. So a little bit less at the moment, but while I was raising that round, I'm guessing probably at least 50%. I'm also the inventor of some of the technology, so I got a lot of time in patents and trying to build the technology out and improving the prototypes and all that. So there was, you work as an entrepreneur probably 80 plus hours a week on your business. There's not a moment that I'm not working on stuff, right? And of course, raising capital is more of a weekday type thing, and then sort of the other stuff happens in the evenings and on the weekends. And so if you add all that together, I'm guessing, you spend during the week probably a majority of your time raising capital. But it's like kissing frogs, right? You got to kiss a lot of them, but you just never know which one is going to actually, do something or be interested in you. And
Be your princess, right?
it's, yeah, exactly. One of them turns into a prince or a princess, whatever you prefer, I suppose. But it's a lot of work.
You have some questions here.
I wondered how you got into 3M and Merck respectively. You were two tiny companies starting up, and you both you got in the door at public companies. So I wondered how you each were able to do that. You knew someone, or you did some creative networking, or what?
Yeah, part of it is kissing frogs also. So with the customers, it's a numbers game. But for Merck in particular, it was an introduction through somebody in the industry who really believed in what we were doing. He was also in health IT and said, hey, you should meet the head of innovation at Merck. And we had breakfast in Cambridge very casually, and I think there was good chemistry there, and he believed in what we were doing, and it was probably good timing, because at that same time he and his team were figuring out some testing out some new innovations, and what we had was something that they wanted to try out, and I think that relationship basically grew from there. And we then the next step is that we had to deliver well on that initial pilot, which we did, and so that's how we got in. We didn't even have an office at the time, so when Merck asked if they could come in, they wanted to have a kickoff meeting at our office. Had to sign up for a membership at Work Bar downtown so that we could have a boardroom. It all worked out. They thought it was really cool that we had this, industrial workspace, a shared co-working space. So, I think part of the fact that we were so small was actually part of the allure, that it was something so innovative, and this little company creating something that they really wanted. I think that was actually quite attractive to them, that we didn't have to be this big 300-person company. So that's our story.
Yeah, so in my case, maybe it's similar in some ways. When you hold that up more? Okay, sorry. But I was building a prototype, and we had adhesion problems, glue. We didn't have the right glue on it, and we called up a technical guy from 3M and said, hey, we have this problem, an engineering problem. Can you come over and help us out and find out the right adhesives to use? And he said, oh, sure. So he comes in and looks around and he says, gee, this is really interesting what you guys are doing. You know, we might be interested in doing something with you guys. And I said, okay, sure. So 2 weeks later, it just turned out that one of the chief technology officers from one of the divisions, and 3M is an enormous company, of course, happens to be in Massachusetts for a tour to visit some customers. He calls up and says, hey, can we swing by and visit? Sure, so come on over, right? He loved it. He said, oh, this is a 3M product, that's a 3M product, that's a 3M product, and we use membranes, and guess what, they make membranes, right? And so very luckily, the CTO there says, can I make an introduction to the 3M Venture Group? And he said, of course you can. That's what you have to ask. And so that's how that all got rolling. So we were lucky to network and then ask for help. And that's, I think, how we got started on that.
John, you had a question?
Yeah, so you kiss a lot of frogs until you finally find the prince, the princess. And when you do finally find that, how much, can you talk a little bit about the diligence that you do with respect to the financing sources? Because a lot of entrepreneurs, it's sort of counterintuitive that the financing sources are doing a lot of diligence on you, but how much are you doing on them? Maybe we can talk about that.
Well, for us, there's a few key things. Is that we wanted to get lead investors who had good reputations in the Boston area, and most of our investors are fairly well-known angels. I mean, most of them are either members of some of the prominent groups, so like Launchpad and Golden Seeds. We actually didn't do our deal through any of those groups in particular, but all our lead investors are sort of that initial lead syndicate. They were part of that group, and then they brought on some of their friends, and so that was part of the diligence process, that there were connections and people who had co-invested with each other. And then the other side of it was there were people who had been entrepreneurs and who worked for a healthcare diagnostics company, or actually are still currently senior executives, the CEO and the chief business officer of a local, very successful diagnostics company. They came on board as investors. So, I mean, I didn't really dig down into all the deals that they've all done, but everybody was pretty well known in this market.
So, yeah, I'm maybe a slightly different opinion about that. I think that an entrepreneur can get in a situation where he'll take the money no matter who the investor is. I'll be honest, okay? Because sometimes you just have to survive, and you can't be too picky, right, about that. So I don't think we necessarily do a lot of due diligence on our investors per se, but you do try to network with quality guys that are in angel groups, like exactly what I'm saying. You just kind of want to make sure that you have the right people investing in the company, that they know what they're doing. I mean, I've had some guys, spend a lot of time wasted on it. They say, oh yeah, we made a lot of money in the pizza business, and we want to be an investor in your company. You seriously can waste a lot of time with that stuff. I mean, and you know what? If we were desperate, you end up spending that time, and eventually you see that there's really not much behind it. But you've wasted several months with meetings and back and forth, and these guys, I'll tell you, they act strangely. They don't do things like you might expect them to happen, whereas people that are part of an organized angel group like a Launchpad know what they're going into, know what they should expect, and know how they, if they invest, how they would invest. But you don't always get that, and if you don't have those connections yet, building that up and getting into those groups is very, very key. But you do get some weird ones, I'll tell you.
And I'll sort of add to that, is that one thing that I didn't know was that there are some angels, even within these reputable groups, that sort of have a reputation of flaking out on deals, so that they'll go through the diligence process and they'll even follow up with you and ask what's going on with the deal. I'm not sure why, I think they're just fishing for information, but they actually don't go ahead and write the check. So there are a few people who have these reputations who kind of like lead you on, and then suddenly there's some family crisis and they can't write that check. So yeah, I think with what Peter said, I fully agree. Sometimes you're so desperate, but if you're raising from angels, I think generally for us, what was important was that the leads, the people who were driving the term sheet and were driving the due diligence, had good reputations, because if you're going to be spending the time, you want those people to have a reputation that they can bring on their friends and have a network of people that they've done a lot of deals with so that they can bring onto the deal. That saves you time if there's a network effect there.
Yeah, let's get back to kissing frogs. You said earlier that looking forward, you really never know who's going to come through, and but with hindsight, it would seem to me that you can sort of make sense of who did come through. Why? I mean, there's always a good reason why people come in, and so I'm curious of your conclusions or reflections on that.
Yeah, I mean, so when I did the robotics company, I was lucky to network into Northbridge. And when I did my presentation there, Northbridge brought a guy in from the semiconductor space who was a CEO in one of the local equipment companies. I did not know him personally, but we all knew the same people. And so then they basically got us in front of a company that I happen to know the CEO of very, very well, and then we presented their board. On the board of that company, publicly traded company that Northbridge was an investor in, was a gentleman that ran IBM Manufacturing. He had 150,000 people reporting into his organization. He then introduced us to a guy that ran Intel Manufacturing, right? Don't have to tell you how many people are in that organization. Those guys both loved it, and then the Northbridge VC shook my hand to say, I'll make this deal happen, right? He didn't care who I was talking to at that point in terms of whether it was Matrix or one of the other guys. He said, oh, I don't like those guys. I'm like, here, call this guy, he'll do the investments. Okay, that deal was done at that point. But that's unusual because, when I look at this particular company, it took a lot of effort to get the angels on board with this, right? They didn't understand the air conditioning market. I mean, honestly, the last time VCs invested in air conditioning was in 1905 when Mr. Carrier was still walking around. Like, seriously, right? And of course, air conditioning is fundamentally a manufacturing play. And how many guys in the angel groups know manufacturing? Not that many, right? There's a lot of medical guys, there's a lot of software guys. And manufacturing, interested people is small. So you got to be, lucky enough to hit a few of them that understand sort of what you're working on. But I agree, there is an absolute, group of angels there that will go through the due diligence. They'll play along, and I had on Launchpad, I had 2 angels in there that were air conditioning guys. They both did the whole due diligence process and didn't write a check. That should scare you a bit. If you're the other angels that are writing the check that are not in the air conditioning business, I still don't know how we pulled that one off. But they didn't because they said, well, it's a very tough market. Yeah, I agree. It's not that easy to get these guys and to convince them, and it's a big process. You got to work the relationships, you got to build the relationships, and I think you got to get lucky in some of these situations. And then there's always one guy that's going to push to make the deal happen, and that's the one you got to pick up and say, who is actually the guy that's going to drive that deal to close? That was true at 3M. That was true with Northbridge. That was true with the angel groups. It was actually the clean energy venture guys that made that whole deal happen, because they had already given us a convertible note a little earlier, and they knew the connections and could make the phone calls behind the scenes and get the other guys to come over to our side and make that deal ultimately happen. But it's a lot of work. It's a lot of work.
In terms of the kissing frog still, is how much was warm introductions versus the cold call?
They were all warm introductions. So, yeah, I don't think, none of our investors were cold calls, but there were different ways that I met those people. So, Yubiki Health was a Mass Challenge company for last 2012, and we ended up being in the top 26, so we were a winner, which gives you a lot of exposure. It also gave us the opportunity to pitch to Mass Ventures, which is formerly known as the Mass Technology Development Corporation, so the state-run VC company. And then, just the glow from Mass Challenge, I think, got us sort of a favorable response, or we had some angels wanting to work with us, or somehow approached us. Nobody comes up to you and says, hey, I want to give you money. But we did have some angels say, hey, I'm interested in potentially being on your board or something like that. And then I basically turned that around and said, well, let's talk about our financing first. And you can be on the board if you invest in us, So there were sort of conversations like that, but yeah, they were all warm in some way. So one investor was a panelist on Piranha Pond, and another one was a judge in Mass Challenge 3 years ago when we pitched the first time, when we didn't have anything but a business plan. And we actually got rejected by Mass Challenge the first year, but I just kept on following up and giving updates to that person. And I think at some point she probably just decided, oh wow, I'm not sure if I believe in the idea, but I believe in Jackie. She sure is tenacious. That's sort of, I think, a lot of it. It's not necessarily that they believe in your idea. I think there's something that they saw themselves in me. I don't know. I will never know what made some of these investors jump on board.
I think that's true in my case as well. I think 90+% of the introductions were warm introductions, people that you know and that can put you. But I would argue, we were a Mass Challenge company as well, in the first year actually. And then we did a lot of, I did the Clean Tech Open, I did a lot of presentations. I don't even know how many versions of my slide deck I have, probably, I would say, well over 100, probably close to 200 versions. Every time you get feedback from an investor, it's, well, I don't like this part of it, or I don't like that part of it, but I do like this. Then you change, right? You adapt to what they're telling you. I changed the name of the company, actually. On the Mass Challenge, we were called 7 Solar. We were doing solar air conditioning, and it turns out that nobody was interested in solar in 2010. Just even today, it's just solar is gone. I had to go change the name and the business plan as a result of that. But yeah, the introductions were all basically warm introductions, or people we knew, or people we met at conferences that saw me in the audience and say, oh, that's an interesting one. But yeah, it's building the network that's really going to get you that investor.
Okay. What's your exit strategy, and when do you plan to get rich?
All right, I was telling this joke earlier today. There's only 5 reasons, that companies get bought. Only 5 reasons to do an acquisition. 1, the technology buy, and what they're willing to pay can be infinite, because they gotta have the IP, and they need to have it. Basically, you may be bought pre-revenue if the IP is really good. The second one is take out a competitor, They buy you to shut you down. The third one is a market buy. I want to be into the fill it in, solar business, so I'm going to buy a solar company so I can be in the solar business, That happens quite a lot. And the fourth one is a market share buy. United Airlines and Continental are merging to become bigger than Delta or American or whatever, The fifth one is CEO ego, and that plays a role in all the other 4, So when you ask, when are you planning to get rich? That's really an ego question, And I have learned because...
Did you not start a company to end up with a lot of money at some point in time?
No.
No?
I don't think I did.
Okay.
I'd like to see that be part of it, but I don't think that that's the real primary motive for me. I love what I'm doing. I love the technology. I think it's highly, highly interesting. I think it will be huge. I think that the guys that actually can help push it into very, very large manufacturing will make a ton of money doing it. And I think that's why 3M will eventually buy the company. But I didn't start with that in mind. I certainly didn't. I have a good idea and I want to make it happen. That's why I started.
Excuse me, when you say CEO ego, you mean the buying company CEO?
Oh, both sides.
Both sides.
Absolutely. My robot company was pre-revenue, and I got a $20 million offer. I would have probably made $3 million personally, and I could have probably gotten the deal up to 28.
Yeah.
And it was Applied Materials, big company. We certainly could afford to buy it, And it was 2005 or 6 or 7. The market was doing very, very well at that point, and they put the offer on the table. The VCs would have barely gotten their money out, pretty much break even for them. I personally would have made a lot, and I didn't take the deal. It's my ego that got in the way, not theirs. They bid too much for the company. We were worth 28 million. Okay, that's a different story.
Okay.
but I didn't take the deal.
I understand, I agree fully, but I've also seen situations where you need the CEO or a really key person in the buying company, their ego gets involved. And
Oh, sure.
this is something we should do, and their reputation gets on the line to help drive it
Absolutely,
through.
it's
right?
on
Yeah.
both sides.
Yeah.
And just to go back to think about that particular situation, my whole board was going like, oh, this is great. Now, the market wasn't doing this, right? This was a year and a half before the collapse in 2008.
Yeah.
So the market was going like this. We were doing phenomenal. We just won a big lawsuit, right, with Brooks Automation. I can read it up on that at some point. But we just won a big lawsuit. We just got Intel to come in and put $4 million in on top, right, of the B round. And, things were going very, very well. We get this offer basically out of the blue. And we said, the board goes crazy. They get their ego into it too. They say, oh, the company's worth at least 60, 70 million. And then we get the offer in at 20. And everybody's, just all of a sudden deflated and said, oh, we're not doing this deal. Well,
Yep.
should have done
Jackie?
My primary objective for doing what I'm doing has never been the money, of course. Hopefully that's a byproduct of, doing something that makes an impact and good product that creates value for the healthcare industry and for the consumers. But, so for us, our exit strategy, the most likely exit paths are an acquisition by an insurance company. There are pretty good examples of that happening recently where either an insurance company or a disease management company has acquired a healthcare IT company. And increasingly those healthcare IT companies are actually consumer-facing sort of services. So Aetna recently bought a little company in Colorado called iTriage for something like 40 million, but it's a very small company, just a few people. And then a larger acquisition, United Health Group recently bought a Cambridge-based startup called Humedica for hundreds of millions of dollars. It's not disclosed yet, but it's a pretty big deal. A startup around data that does data analytics. So those are sort of the possible exit paths. How long it's going to take, I don't know, but the time horizon is going to be at least, I would say, 5 years from now, 4 to 5 years from now. There's a possibility that things happen sooner, but I think realistically, I would give it 4 to 6 years.
Now, you're both now very experienced in raising some funds. What do you think are the most common misconceptions those who are not raising money yet have about the process?
Most common misconceptions. I think people don't understand how much time and effort it takes. I think a lot of entrepreneurs are too wrapped up in their own idea and don't want to change the way they pitch or what they pitch. And so they focus too much on the technology, not enough about the marketing of the deal. And so if you could listen or listen well to the feedback that investors will give you, they will all tell you what's wrong with your deal. You just have to choose to pick it up, because any VC I've met, any, will say, well, this is interesting, but, and then they'll list off 2 or 3 reasons why they would not do that deal. Right? A lot of times it has nothing to do with the technology, it has a lot to do with the market, or can you get to it, right? A lot of technologists like me forget that part, right? Or we gloss over it, or we don't think about it too much. And so if you listen to the feedback and adjust and readjust and adjust again what your pitch is, your positioning, and I'm not saying that you're just trying to put lipstick on a pig, that's not the case. But what you really need to do is listen to what makes your deal investable and what makes it not investable. And a lot of entrepreneurs waste a lot of time trying to solicit investors that are not suitable for the type of thing that they're trying to do. In other words, you're going after a big venture capital deal to fund a restaurant business to make it something extreme, right? Of course, there's not a lot of guys that do that because you wouldn't get into the door in that case. But my point is, it's sometimes a lot of time gets wasted with investors that are not appropriate for the business, and you just may not realize it. But as an entrepreneur, you can pick that up pretty quick, and then you have to realize what's going on with that deal, and what have they told you, and that hopefully will allow you to adjust to a different type of investor and have a high probability of getting something done.
Jackie?
Well, there's a few things that I wish I knew before going into this, and YubiKey Health is actually my second startup. The first startup was a venture-backed software company that was based in Helsinki, Finland in 2000. So it was a very different investing climate, and so you cannot transfer what you learned from raising money in 1999 or 2000 to now because it's a much different environment. But still, the one thing, so it was much easier then. We raised venture capital. I had no experience. I was 21 years old. Anyways, we got money. I think none of these seminars, so I've been to lots of these things. So Mass Challenge has workshops on how to raise money, perfecting the pitch. But nobody talks about what to do after the pitch. So how do you actually close, and what's the process? Because by being part of Mass Challenge and doing all the networking, I think my team and I did a really good job of trying to find the investors who would be interested. So we had lots of people who were interested in our deal, but then we had to put together the deal. So the term sheet and figuring out the terms that were going to work for a particular set of angel investors. And some people like convertible notes, some people preferred price rounds. And so we had to figure out all of that, and that took an enormous amount of time of negotiating. And then after that, I had been to workshops that said, okay, all you need to do is get your lead investor and term sheet, and everything's going to fall into place. No, it doesn't. I had great lead investors, people who, if you mention their name in a room, most people in the Boston investing or VC community, angel community, they know them. So I somehow thought that, okay, now I just need these guys to sign the term sheet and circulate it around Boston, and a whole bunch of people are going to pile on top. Well, some people piled on, but it was still like pulling teeth to collect those checks and get everybody to review the documents and sign it. So I don't know, I think there's a big misconception over, the stages, the hoops you have to jump through, even after you've passed due diligence, even after you've sort of rounded up your list of highly likely to participate. Of those highly likely, another 50% are going to drop out for whatever reason. My kid decided to do a master's degree, I'm getting divorced, whatever will happen, happens.
It's like herding cats. I got 54 angels on my cap table. And if you try to get something signed, it is horrendous because you just got to, and then of course every one of those guys feels it's okay to come and call me up and find out how things are going, right? And that's another hour conversation. Or like, can I swing by this afternoon? Some of these guys are retired. They have nothing else to do. They come over, and it's like, oh, gee. And I don't want to try to be nice about it, of course, but it is very, very large.
And the worst is that guy who calls you up every afternoon is the one who put in $10,000 or whatever the minimum was going to be.
I've been looking for money for 6 months, and some really, really strange. Have you looked at pension funds? At all? As potential funding sources?
It's a mismatch typically because if you're doing early stage, pension funds don't do early stage.
Or family trusts. Some families invest for 100 years.
This is in the range of long shots, right? So could it happen? I don't know, but private equity probably won't do deals for us. Angels maybe, VCs maybe. Strategics more likely these days. Strategics are the ones that have actually now some money to put in and are doing active deals. But family offices I have no experience with, unfortunately.
So put a phantom CEO on the board named Jerry Maguire. Show me money.
Anything else you want to tell me on
Yeah,
these questions?
about the care and feeding of your investors. There are a lot of minefields there. You've been through this more than once. I'm sure have some thoughts on where the minefields are and the challenges you've had in communicating and keeping your investors informed.
As a corollary to that, can some of that happen with the board seat? I'm assuming as this group invests in you, they have at least one board seat. Is that?
Actually, no.
No?
No, they have some observer rights, but not a board seat. So what I did, and I did it somewhat on purpose, I got a very experienced board together before I got the A round closed. Actually, a year and a half before we did the A round. And so these were guys that have been on boards, that understand either the market or that I know personally are good board members that have been publicly traded CEOs before. And so I had a very solid board put in well before any angel investors came in, and particularly because I didn't want angel investors to come in and take a board seat. Advisors or being in the room, I don't have a problem with, but actually voting on what the company's going to do strategically, I just didn't think that was a good idea.
You kind of got burned by the last board you had.
Yeah, it's not always easy because I think having a very, very strong board is really, really key. And I'm not talking about just a technology advisory board. I'm talking about a real, board of directors that actually does hiring, firing of the CEOs, and hey, not an example for that, right? So I think that's key. The angels themselves are often not experienced enough in the technology or the business to understand what it is. Now, if you don't have a board, then they'll ask for a seat, definitely. But that's one of the reasons you want to put one in that's strong, that they can't have really much objection.
So sorry, what about the care and feeding of the board itself?
So last year, and this didn't work very well, we had a board meeting every 6 weeks or so. And it became just an imposition because it took me 3 days to get ready for the board meeting, and then another day of follow-ups afterwards. I was spending almost a week every 6 weeks just doing the board meeting. So I changed it, right? I said, look, we're not doing that. We're going to do every 3 months or so, and that's more than enough. And so what we do now is with the board, we have a call every 3 or 4 weeks, and it's an hour tops. So we do it at 5 o'clock in the afternoon, and there's no slides, and it doesn't take any time to prepare. So we keep them informed that way. And then with the angels, we do sort of a quarterly mailing blast that says, here's the major events that happened. And the good thing is, Launchpad is in our company, Social Clean Energy Venture Group. They have each an observer on our board. And so half of the angels on the cap table get their own internal network to inform of what's going on, so because they can debrief the rest of them. And then we have some individual angels, actually quite a lot of them, and so I still get occasional emails and phone calls from them, but it's a bit more manageable that way.
Jacqueline, what's your situation?
Yeah, so I agree with the board. We're actually in the process of setting it up, but one of our investors, our lead investor, essentially has a seat, although it's not formalized yet. In terms of the care and feeding of the angels, I just sent out the first angel update last week, and actually I didn't get any. I got one question back, so I think that went okay. So what I did though was ask the other angels who experienced angels to send me some templates of good ones they've seen, so that I made sure to cover all the points. And I think that what we sent ended up being far more than they expected for us from the very first update. Status on the financial status on all the operations, and I think that they thought that was pretty good for 6 weeks in. So I think that kept everybody quiet. But we had one question, and actually that turned out to be from Mass Ventures, and they're an institutional investor, so I think that's fair game for them.
Well, we've just about run out of time. Are there any last questions from the audience? John?
Can you just talk a little bit about how important it is to use a lawyer in the process?
Well, actually, that leads into a question that I have. You've got a small company, you've got 3 or 4 people, you had started out with 7 or 11 people. What types of outside resources did you hire, specifically in terms of legal, financial, and marketing? And we'll be finished at 12:30, but just briefly, what type of other resources did you bring in?
I'll just put on the lawyers, but go ahead.
All right, so I'll start off. I did my first pitch for Foley Hoek. My first practice pitch was for Mark Haddad at Foley Hoek, who a lot of people here know. He's a phenomenal guy, good attorney, by the way. And he really, I've known him for a long time. He's a real big supporter. Okay? I can't tell you the details on this, but I'll tell you that my legal bills, by the time the A round closed, were very, very substantial. Okay, he did all the patents work on SPAC. He did all the corporation filings. We did 409As myself, and for some stuff, you just don't need an attorney. For some of it, you do. Setting the company up properly, you do, because you just don't want to make mistakes there that get expensive to fix later. Also, he is good at making introductions, and that's helpful with investors and other things. So then it took me a while before I really brought in a part-time CFO. Actually, one of my founders was a CFO, so he did the work in the beginning. I did bring in Charles River Insurance. Yeah, Ellen Bohm Gitlitz, you probably know her. And she did a lot of the early insurance work, so we did that early on. I did, let's see, on the HR side, we didn't do much at all. My CFO did it on a part-time basis. So really, that's really the big ones, I think, for a long time. IT, we didn't do anything.
What about marketing?
Marketing, I had 2 BizDev guys on the founding team, so didn't really do that on the outside. Would have been, I think, too expensive, too early for us.
Yeah, so we've had a legal firm engage with us from the beginning, so that's important. It's expensive but necessary, and particularly with the funding round. So the term sheet negotiation, that was all handled. Well, I was negotiating the terms, but the term sheet and the drafting the terms and all those documents, that had to be done by our the law firm we engaged. We have a CPA firm engaged. We've pretty much had one from the start, even though I basically did all the financial work. But when it came down to due diligence, I needed to have some backup from a CPA just to make sure that the financials were up to par. And then marketing, we actually haven't hired any external marketing staff. I'm the business development person, and we are hiring some BD people. And we've basically managed our marketing through having interns that report to me and I guide. And in terms of the human resources, none at all, but we've recently engaged a recruiting firm to search for some of our next hires. It's a really tight programmer market, and there's this particular skill set that we really need, and it's hard to find. So, or there's lots of them, but they all have good jobs. so we need somebody to really help us find that person.
Anything else you want to tell the audience?
Yeah, I think I was too dumb to give up. I think that's a big part of being an entrepreneur, is never give up. And there was a lot of sleepless nights where I'm going like, oh shoot, I had a lot of nights where I couldn't make payroll, and my guys had to basically not catch their check for like a month at a time. And so that's really scary, because as a CEO of Massachusetts, you're personally liable for payroll, right? So you're sitting there and it's like, okay. So yeah, I'd say if you're an entrepreneur, never give up. Keep networking, keep massaging the idea to the point where you can get it investable. That's it. That's my advice. Oh, and by the way, if you guys all know a very good VP of operations with high volume manufacturing experience, we are hiring.
They won't have to hold their paychecks. They won't have to hold their paychecks.
Not at the moment.
Okay.
But things change.
Yeah, I would say never give up. I mean, with everything, you always think that, oh yeah, we just need to raise this funding and then it'll all be good. And honestly, towards the target close date, the checks were coming in, the wires were coming in, it looked like everything was online. And then one of our fairly major investors suddenly backed out unexpectedly. And I will never know exactly why, but it could have been something personal. But anyways, it meant that we weren't going to make our minimum close. And so we had to scramble at the last minute to backfill that in order for the syndicate to agree to close. So, there was, those sleepless nights were a big part of it. But we made it, so. But that happened because we just didn't give up. And we had to kind of believe that the impossible was going to happen. And it did.
Thank you so very much.
Thanks.